The goal of today's video is to go over the W-4 form and to explain how you want to properly fill out this form so that you're closer to a break even whenever you file your federal income tax return. One of the first steps before getting fully hired is to fill out the W-4. This is the employee's withholding certificate. Ultimately, it's what tells your employer how much to withhold for federal income taxes. And so this form is very important because it's changed over the years. If it's not filled out correctly, you're potentially not withholding enough tax, and then you're going to run into the issue of owing tax when you file your tax return. On the flip side of that, some people fill it out incorrectly in the other direction, and they're withholding way more than they need to, and they're getting a huge refund when they file their taxes. So it's really just one page with 5 steps, and we're going to go step by step, and I'm going to talk about the impact of each step. So step 1, entering your personal information. As you can see, this is where you simply enter your name, address, social security number, and your tax filing status. Obviously, this is all important. You want to make sure you don't have any typos. You want to make sure your social is correct. You want to make sure that the address on this form is your mailing address, because ultimately that's where your employer will send you your W-2 in January. Now, letter C of step 1 is very important. The tax brackets are different depending on how you file. If you're filing a single, then you'll check box 1, or even married filing separate. But if you're married and you file with your spouse, then you want to check box 2. And box 3 would be head of household. This is the status where you're unmarried, but you have dependents and you're keeping a home for yourself and the qualifying dependents. So that's going to be important because, like I said, the tax brackets are different depending on your filing status. Steps 2 through 4. Only if they apply. So basically, we can skip some of these if they don't apply, but we're going to go ahead and assume that they all apply and go steps 2 through 4. So step 2 is the multiple jobs, or if your spouse works. This is a super important step. A lot of people skip this, and so this is when they'll end up potentially in a spot where they owe tax. And let me explain why. So let's say in step 1, you checked box 2 that you're married filing jointly. But then in step 2, you don't notify on this form that your spouse works. Well, then what's going to happen is your employer is going to assume that you're filing married, so you have the bigger tax brackets. However, you're the only income for your family. And so in that case, they're going to withhold at a lesser rate. So it's important that if you're married filing jointly and you have a spouse who works, it's very important that this step is filled out. That way your employer knows that you have a spouse that also has income, and therefore they're going to withhold at the correct rate. If there are only 2 jobs in total, you have 1 job, your spouse have 1 job, then you can check the box at C. And basically what that's going to do is, well, and first of all, when you check box C, you want to make sure your husband or wife is doing the same on their W-4. But basically, that's going to generally make it to where each employer is withholding enough. You might want to be a little bit more exact. There is a multiple jobs worksheet, which is on page 3. And that actually has step-by-step of how to fill out this calculation, whether you have 2 jobs, 3 jobs. And so you'll see those instructions on page 3. It's important to fill that out if you have multiple jobs, because otherwise, if you just skip step 2, then your employer is going to assume you're the only job for your household, and they're not going to withhold enough tax. Step 3 is dependents. This was something that changed a few years back. People oftentimes found themselves, again, not withholding enough because of step 3. The way step 3 works, if you have children under the age of 17, you're going to multiply that number. So let's say I have 2 children who are under the age of 17, and I have 1 child who is 19. I'm going to multiply 2 times 2,000. I'm going to put 4,000, and then I'm going to multiply 1 by 500. So that's 4,500 in step 3. And what that's doing is that is taking into consideration the child tax credit that you will claim on your tax return. So you have 3 kids, 2 are under 17, 1 is 19. So you're going to get a $4,500 child tax credit on your tax return. So therefore, your employer is going to withhold less, in fact, up to $4,500 less than they normally would if you didn't have the children. Here's where we see a huge issue. If 2 spouses work and each spouse fills out step 3, then both of those employers are going to be considering the child tax credit. And so you're going to be double counting the child tax credit. And so then you're going to end up under withheld again. It's very important for step 3 that only one of the 2 spouses fill this out. One spouse will leave this blank. The other spouse will fill this out. Very important. Otherwise, you're going to be under withheld again. Step 4. This is a pretty important step for those who want to potentially make personal adjustments. Sometimes people don't like to break even. They want to have a big refund at the end of the year. And so that's kind of where step 4 might come into play. So for example, box 1 here in step 4, other income not from jobs. So basically, if you want them to withhold extra tax because you have other income coming from maybe a 1099 or some other type of income stream, you can add that to 4A. This could be interest, dividends, retirement income. This lets them know, hey, I have other income that I'm not withholding on. And so that's going to then prompt them to withhold a little bit extra based on that income. Okay, B is going to kind of be the opposite of that. This would be if you had other deductions. So maybe instead of taking the standard deduction, you're itemizing your deductions, or maybe even if you have some type of other credit you're anticipating, maybe you could add that information in 4B, and then that would actually have them withhold a little bit less. Step C is just extra withholding. So oftentimes when clients come to us and they say, hey, I just want to be safe. I don't have other income really coming from other streams. I only have one job. I'm single. This is my only job. However, I want to have a little bit more of a refund at the end of the year. So I just kind of want to pay in more. Okay, that's 4C. So in this case, you would just write down in 4C the amount that you want them to withhold each pay period. Extra. And so you want the additional federal income tax you want them to withhold each pay period. So for example, instead of the normal amount that's calculated, I want them to withhold an extra $50 per payroll. And that way, when I get to the end of the year, that's $50 times 26 pay periods or 24 pay periods. And so as you can see, that adds up, and that's going to be some additional tax that you've paid in. And so that can kind of help make sure that you're getting a refund and you're not owing or at a break even. All right. And final step is step 5. This is where you sign, date, hand it back over to your HR department. If you have any questions, if you feel like anything wasn't explained, please leave a comment below. We'd love to respond and help answer those questions. And if you enjoyed today's video, please give us a thumbs up, and we will see you next time. If you found today's video helpful, please give us a thumbs up, consider subscribing and leaving a comment below. And as always, thanks so much for tuning in.